Recent market volatility has reminded investors of the inherent risks in equity investing, prompting them to evaluate if and how they're protected on the downside. Many investment strategies that attempt to protect or buffer downside risk are complex, expensive, or don't provide any potential upside for equity participation. The Amplify Black Swan Growth and Treasury ETF, ticker SWAN, is a simple yet powerful strategy that may help investors buffer against significant losses while still participating in potential equity upside. The Black Swan ETF seeks investment results that correspond to the S-Network Black Swan Core Total Return Index, a quantitative rules-based approach that seeks uncapped exposure to the S&P 500 while seeking to buffer against the possibility of significant losses. Roughly 90% of the portfolio is invested in U.S. Treasuries and 10% in S&P 500 long-term call options. The index rebalances on a semi-annual basis. Market downturns happen, even within years that have positive performance. The Black Swan ETF seeks to mitigate the risk of timing the market by combining two low-correlated asset classes in one ETF. Why invest in the Black Swan ETF? It's a simple core equity solution for investors who seek to buffer against equity downside, but also participate in upside potential. The Black Swan ETF, helping investors navigate volatility. The fund is not a money market fund. Consider carefully the fund's investment objectives, risk factors, charges, and expenses before investing. This and additional information can be found in the Amplify Fund's statutory and summary prospectus, which may be obtained by calling 855-267-3837 or by visiting amplifyetfs.com. Read the prospectus carefully before investing.